very warm welcome to all of you. One of the things that's interesting is that famous saying that we live in interesting times.
One of the things that Charter Hall is very much focused on and continues to focus on is finding assets for you with long leases to good tenants in sectors that are growing. And the things that we have brought to you across the office sector, the retail and industrial sector is very much along that theme and will continue to be on that theme.
I trust Charter Hall for our decision making, and it's a trust thing.
I've got a couple of things to talk about that are not totally budget related, but I'm imagining that the things that you're kind of most focused on right now today are how many of those things will affect you, how they'll affect you, and whether there's anything you need to be thinking about urgently. So I decided that I probably should divide today into broadly two things: getting money in and getting money back out of your SNSF, because the budget changes obviously affected both.
Commercial property return has far exceeded any of the other returns. So therefore I find it comfortable and quite safe here.
And what I'm showing here is the total population in each of the capital cities and the growth that they expect over the next 20 years. Now these figures often get talked about as 1.3% and 1.4% for Sydney over the 20-year period. It's kind of a benign, boring number. But when you actually look at it over 20 years, what does that mean?
Alternative to shares and of course deposits. On the one hand there's a stability but an active sort of approach to trying to get new investments on board.
On the back of that cut on Tuesday we saw the REIT sector rally 2.5% while the All Ordinaries went backwards quite substantially, and that was followed up again yesterday. We expect this level of outperformance to go for some time.
There are others out there who come across a bit more high risk, I think, and for me it's about a good return, but at the same time keeping your capital safe, and I see that Charter Hall is probably one of the safer players in the market. So,
a good place for me to start is to talk about performance. So the slide behind me actually tracks the performance of every one of our vehicles that we have managed allocated to Australian real estate over the last 19 years.
There's 4 properties in the portfolio. The first one we're looking at here is Liverpool. Liverpool was our first strategic investment on the east coast of Australia in 2006. It was part of the McGrath Group. It's very tired, it's very old automotive strip, but it's very, very successful. Collectively with the landlord, we're investing in Charter Hall approximately about $50 million about re-energising the Liverpool automotive strip. Why are we doing that? We love Liverpool. And we love it because of not only the demographics, we love it because of the Badgery Creek investment, we love it because of the intermodal port that's coming into the Moorebank area. Me personally, from a logistics point of view, I love the intersection of the M5 and the M7 and the Hume. I think it's sensational.